Well, ladies and gentlemen, we've just had some insights just now on the new frontiers in financial services. And over in India, there is also a fintech revolution happening right now. And financial inclusion may be one of the most pivotal outcomes to emerge from this revolution. So what happens when 1 billion plus people get a mobile phone connection, a bank account, and also a personal ID number? Well, that is the question I'm going to be putting to my next guest. So please give them a very warm welcome. Please, first up, we have Bhavin Turakhia, the CEO of Zeta. A very warm welcome. Fantastic to have you here, Bhavin. Thank you so much for joining us. Next up, we have Ashneer Grover, the MD and co-founder of BharatPe. Excellent to have you both here. Thank you so much for taking the time out of your very busy schedules to be with us here at the India Global Forum, the inaugural event here at the wonderful Taj in Business Bay in Dubai. Thank you. Yes, so our topic here now is new frontiers in financial services. I thought we'd start off with Bhavin, if I may. Now, tell us a little bit more about Zeta and the thought process behind it, just to give our audience a bit more clarity on exactly what it is for those that don't have that clarity. And also, Zeta, in fact, jumped into the Unicorn Club very recently as well. So tell us a little bit more about that whole process.
Sure, yeah. So, hi, I'm Bhavin. I'm the CEO and co-founder at Zeta. And Zeta is a modern banking tech company. You know, banking, interestingly, is probably one of the few industries, I guess banking, insurance, and healthcare probably are the last ones remaining, that hasn't seen a meaningful software refresh in more than 30 years now. Banks still continue to use technology that was written before some of us were born, before smartphones, before cloud computing existed. And so back in 2015, I and my co-founder, we started Zeta with a simple goal of essentially rebooting. I mean, these days, pretty much every software that we use, whether it's on the business side, CRM, HRMS, accounting, personally, you know, phones have changed completely. Even space shuttles have changed completely, but banking software has not. And so, as I said, back in 2015, we decided to start Zeta with the simple objective of literally rewriting the full banking stack end to end. A pretty ambitious goal. So we've got at Zeta, what we've built out is we've built a full core banking stack, a payment processing stack, and then all the other ancillary solutions that are needed to sort of run an entire retail or commercial bank. We offer this platform. So our goal and objective, and you spoke about financial inclusion, I guess, you know, if you look at our vision at Zeta, our goal and objective is to essentially maximize financial wellness and financial inclusion for every citizen on the planet. And honestly, in 2015, when we looked at the banking industry, we're like, well, you know, should we become a bank? Which is, you know, certainly an alternative, and Ashneer, my colleague here, can certainly talk to that, which is another kind of angle to the same problem. And our perspective, you know, we're techies at heart, by the way. I'm a techie. I started coding when I was 10 years old and have never looked back since, and so is my co-founder. And our perspective was, well, why don't we build the platform that can enable existing financial institutions to provide a modern platform that can substantially kind of leapfrog financial inclusion, financial wellness for all their corresponding customers, and so that's how we started. And so we've currently got our platform operating in now about 6 different countries, about 9 or 10 different issuers and banks, about 25 to 30 different fintechs. So our customers are banks and fintechs who in turn use our platform to provide products and services to their customers in some sense. And so that's really a brief about Zeta. And yes, we recently raised money from SoftBank, great partnership with them, a great investor in our company. We actually started looking at doing some fundraising before COVID. Well, actually, literally just around Jan, Feb, March, just around the time COVID hit, we kind of paused the exercise and restarted it earlier this year, late last year. Had a bunch of different sort of funds that we're looking at investing, and we felt like SoftBank would be the best partner for us because they have a pretty healthy ecosystem of fintechs and companies that could potentially expand sort of financial services distribution. And so we have some interesting partnerships going on with some of their portfolio companies too.
Well, a huge congratulations, first of all. Well done. Moving over to Ashneer, BharatPe also entered into this much-coveted unicorn club. Tell us a little bit more about BharatPe first off, and also your foray into this unicorn club.
Sure. So I started BharatPe almost 3 years back, so pretty young, therefore, as a fintech. But what happened is when we started, UPI started picking up significantly. So our growth has been on the back, or UPI's growth has been on our back. But essentially, we have really grown immensely over the last 3 years. What we do is we empower shopkeepers by giving them a single QR code. And on that QR code, they can accept payments from 150 different apps in India. We're doing roughly 150 million transactions on our QR codes on a monthly basis. Roughly 15-16 billion annualized payments processed through our system. But more importantly, what we do is we give this service for free, right? So we have taken the payment paradigm and shifted it. We said we're going to give you payments for free, but because of payments, we get to know how much business each shopkeeper is doing, and therefore we are able to lend to them. Now you have to understand, in India, the shopkeeper segment was a segment which would not be underwritten by any bank previously. So what we are doing, using technology and UPI at the core, we are helping these people come into formal credit. And very recently, we also got our banking license. And this is the first banking license to be given in the last 6 years in India, and the only one given to any fintech so far. So hopefully, looking forward to changing the way banks operate. Fundamentally, at heart, I get very disappointed with banks. I was a banker myself. I think banks do not know what's going to hit them. Right? They're so out of sync with the reality. Because they're systematically important institutions, they get certain importance. But if you look at how the customers behave with respect to a bank, and where their technology is lagging behind and where the customer has moved on so much ahead, there's a huge gap. And I think Zeta is doing a great job at that. We also want to build our own core banking and reinvent the way the banking works.
How incredible you've both found that gap in the market, and you're completely disrupting the sector, which is the only way to innovate any sector, isn't it, of course? Moving back over to Bhavin. Now, you've spearheaded a number of ventures, I've been reading as well, in fact, all of which have been self-funded until 2019. What has sort of been the reason behind that, and what was the decision to remain bootstrapped? Was it a conscious one, or what was the reason?
Yeah, I've had the good fortune of being a serial entrepreneur. I started my first company, DirectEye, when I was 17, in the sort of hosting and domain space. Well, you can call it bootstrap. Me and my younger brother, we borrowed $300 from my father. So that was our initial capital. It's still my highest return business in that regards. And we bought our first servers in the US. We started selling, hosting, domains, and a whole host of other services. And organically grew that business and eventually sold it for $160 million in 2014. And I've started 2 other companies since, Radix and Nova, and then now Zeta. And in Zeta, with Nova and Zeta both, we kind of actually took in some funding in the last year and a half. So it's sort of been a departure, I guess, in some sense from what might be perceived to be a strategy, but I will very candidly tell you it wasn't really a strategy. It was more incidental than a strategy per se. I mean, with my first company, we became profitable pretty early on and didn't need the capital for growth. We were largely a technology-focused company that sold through resellers worldwide. So if you think about most tech companies today, funding essentially goes into 2 pockets, which is R&D to build the products, and a larger chunk invariably in CAC, which is customer acquisition cost, to actually sell and distribute the product. And in 2 out of the 4 companies that have started, in some sense, in Zeta also, but in 2 out of the 4 companies have started, there has been almost a negative CAC. So the largest chunk of what you typically spend in a business, we didn't have to sort of invest that much there. Being bootstrapped also actually has a couple of other innate advantages that we've seen over the course of this journey. It forces you to be creative, More often than not, I mean, I won't say taking funding is wrong in any ways, but more often than not, I'll see overly funded startups either lose focus. So you've got so much money, okay, now I have to deploy it and I'll start doing 5 different things. Or worse even, not apply creativity to a problem, but just throw cash at it, right? Because you've got the cash, you might as well sort of go out there and give out cashbacks or burn money or be less creative in comparison, whether it comes to user acquisition or for product development. And so when you're constrained in some sense, I think, adversity is the mother of invention, right? So when you're constrained, it automatically requires you to build this muscle of creativity across the organization, makes that part of your DNA and culture. So I think we've kind of seen those as advantages also. With Zeta, I think our fundraise largely to do with the fact that from a customer acquisition standpoint, our costs are still low because our customers are, we said our customers are banks and fintech. So give or take all around the world, there's about 250 banks that are probably relevant customers for our platform, probably a few thousand fintechs in total. So it's not a massive end customer base if you go out and market to. But there are 2 big expenses. Building out a full stack banking platform is a sizable enterprise investment, which has a gestation period, because when we bring on board a bank, it will take about 2 to 3 years to fully integrate them, fully stabilize operations, etc., make sure everything's running fine, and then so the income starts flowing in. And then the other thing that we want to do is we want to really establish ourselves as the leading modern banking technology provider across the globe. And so parallelizing that effort in terms of sales and marketing across 6, 7 different regions and markets requires an upfront investment. Plus, as I said, SoftBank's a great partner in terms of the ecosystem they already have channels into, so it became sort of strategically an advantage to kind of go down that path. And so we're looking to accelerate growth and invest in our platform both simultaneously with the capital. But so I would say there's no one prescriptive strategy. I think it's whatever works for your company. I think fundamentally it's great to be able to get capital and also get the right partner in who can actually help you along the growth journey. But at the same time, I think it's important to understand that capital is merely a resource and that you don't want to compromise on your fundamentals and substitute creativity with cash at any point in time.
Ashneer, we've very much spoken about the opportunities, the growth stories, the very sort of positive aspects. But I know it must have been, it's hard building any business, I'm presuming. Tell us a little bit about the sort of challenges and the roadblocks. What have been the main challenges for both of you, essentially?
Yeah, so all businesses have their very unique challenges. I think with respect to what we are building on the ground, I don't think I would even recall any challenges right now. Right? If you put me on the spot, see, the thing is, we see solutions and we see problems, right? And the thing we're trying to do is get very creative about the solutions that we put out, right? One thing, for example, I can talk about a bit now, but it would have been very touchy before. At one point of time, my business is lending, right? So if you want to do lending, you need to be a licensed entity in India. We applied for a non-banking financial company license. And this was just before the pandemic. And the central bank said, anyone who has money from Mauritius, right, as an entity, Mauritius has gone into FATF list, we can't give you a license. So for no fault of ours, right, it's our investors who are based out of Mauritius, and we were raising money and they put money in other NBFCs as well. We did not get the license, right? So I was really taken aback because at the core, we are a lender to the shopkeeper and we need a license. But I took it on the chin and I got creative, and eventually I ended up bidding for a bank because I did not get the NBFC license, right? So if I had got the NBFC license, maybe I would have been very happy. I would have not even thought bigger and said, okay, I can do enough lending on this. But because I did not get the NBFC license, I ended up bidding for a bank and ended up getting a bank. And as I told you, it's the only banking license given in last 6 years for a country as big as India, right? So yeah, you have, sometimes the problems lead you to bigger things.
Sometimes you have to go through those challenges exactly to get to those bigger things, of course. We are running out of time, sadly, and I just wanted to get both of your perspectives on the fintech revolution that's happening right now in India and some of the opportunities that both of you are seeing right now going forward.
Ashneer, you want to start off?
Yeah, so on the opportunity in India, see, here's my view. India will lead fintech globally, right? And the reason for that is we've figured out UPI, which is, to me, is the smartest, fastest, most scalable network that at least I've seen. It's mobile first. It uses at the core your Aadhaar as KYC. And it's very simple for any user to use. So we are doing 4.2 billion transactions on UPI in India on a monthly basis. My view is, on top of this UPI, you'll get the credit stack built up very soon. And the big opportunity now in India is actually lending on back of UPI, as I see it. So very happy to say UPI is probably the best thing to come out of India in the last 30 years, while that I recall. And we are really proud of what the government has done with UPI.
You must be very proud.
Yeah, I couldn't agree more. I mean, I think in many ways, India and some of the developing markets have had the unique opportunity of sort of leapfrogging and jumping over sort of what the paradigm has been in terms of technology and innovation. Like, the whole world is plastic and cards, right? India had the opportunity to say, well, we had less than 25 million credit cards and hundreds of millions of debit cards with barely any of them in use. And we had the opportunity to say, well, now that we have 1 billion, 600, 700 million smart devices out there, we have the opportunity to leapfrog that and create a completely different payment ecosystem. So with 1 billion people, we have the population, with 5G and 4G sort of penetration. Now we have the connectivity, and we have the opportunity sort of with UPI, we have the opportunity to kind of leapfrog in terms of payment technology. I think there's huge potential in terms of sort of leading that fintech revolution. I see many countries now looking to sort of replicate what India has seen in terms of payment success.
What about the sort of digital divide? Because we spoke about financial inclusion. How can we bridge this gap when it comes to a digital divide through financial inclusion?
Yeah. No, I think people are as far as money is concerned, people become smart themselves, right? I don't see the digital divide, right? If you look at UPI, in fact, I see more people in the lower strata of income being aware of how UPI works than people who are carded and use credit card and Amex cards, right? Sometimes they don't even know how UPI actually works, right? So I think technology actually has removed that barrier, has removed that divide, and people are able to sort of get on Google Pay, Phone Pay. They are able to scan a QR. They're very self-aware of how the whole thing works. So in the new India, people are not getting left behind because of technology. I think it's the more people who are comfortable with things are actually the ones getting left behind. The people who are actually discomforted and have to rise are actually adopting technology much faster.
And then I suppose you have the youth demographic that's always going to be very technically savvy, aren't they, as well, do you think?
Yeah, I mean, access to smartphones and connectivity has substantially changed the sort of digital divide. So in many ways, with what happened with Jio and therefore all the other telcos in the country, and with UPI, it's kind of created a level playing field. Now, some of the smallest merchants in the country have access to, in some sense, payment and therefore even ordering, billing, and customer engagement mechanisms that you would otherwise find with some of the largest merchants and the Amazons of the world, right? They have at their fingertips. By the way, all these guys, I mean, I agree with what Ashneer said. All these folks, if you talk to some of these small shopkeepers and small merchants, they're some of the smartest people you'll find. They're super smart about their business. Even without any computers or computing devices, they will know, like at the tip of their tongue, their numbers, their inventory, their profits, and so on and so forth. Statistics you sometimes be hard-pressed to obtain from some of the sharpest managers in BI teams and large enterprises, right? But now with access to that technology on their fingertips, you've got a mobile app, you've got a device, you've got the ability to sort of accept payments, engage with your customers, they now have access to same tools and capabilities that some of the larger enterprises did. And so in some sense, it's the connectivity and technology and payment platforms, identity platforms that exist across the country have fairly rapidly, I would say in literally the last 5 years, and many ways thanks to sort of efforts of companies like BharatPe and others, have meaningfully reduced that sort of digital divide.
Sadly, that is all we've got time for. What an interesting discussion. I can't thank you enough for being here with us today. Thank you so much to Bhavin and Ashneer. Ladies and gentlemen, let's hear it for our panel there.
Thank you.